Good morning. My name is Scott Kelly. I'm the CEO of Real Asset Management in Australia. In this short video, I'll be sharing our thoughts on the fall and potential rise of the Aussie dollar. The Australian currency has been in free fall since the coronavirus became a pandemic and its economic impacts started to be felt. The 18% decline versus the US dollar in March was the second biggest monthly fall since the Australian dollar was floated back in 1983. This video looks at the reasons for that dramatic decline, considers if it provides a buying opportunity for those looking to invest in Australia, and finally reflects on how you might invest during this period of uncertainty. Fundamentally, there are two reasons for the decline. Firstly, we saw a material spike in risk aversion as COVID-19 went global and economic uncertainty mounted. In such an environment, the US dollar tends to strengthen in a so-called flight to quality. Secondly, commodity prices have been falling. More specifically, Australia is now the world's largest exporter of liquefied natural gas. So the oil price shock has impacted that and worsened our terms of trade. Some clients have been asking whether the declines in the currency are reflected in weakness in the underlying economy in Australia. Well, if you think about the reasons for the move, it's not reflective of the domestic economy. In fact, given the uncertain outlook, we would favour Australia over emerging markets, which are unlikely to have the same level of fiscal stimulus or medical facilities to deal with the coronavirus. Accordingly, we are seeing capital flowing from Asia into Australia. Secondly, over the longer term, Australia remains one of the most robust and stable economies in which to invest. Therefore, given the reliable, stable environment plus government action to mitigate the economic effects of the virus, now may be a good time to consider buying the Aussie dollar. This is especially true if you have a long-term time horizon and looking for a good entry point. The final point we would make on the currency movement is that the opportunity may be closing. This chart shows a distinct change in direction in recent days and reflects the slight abatement in negative sentiment as various central governments announced economic stimulus packages. Notably, of course, the US. One could reasonably expect that level of uncertainty will gradually fall over the next few months, and that is likely to be accompanied by a rise in the Aussie dollar. It may not get much cheaper from here. We received research from a number of institutions, and there seems to be a consensus across that group that the Aussie dollar will rise and range from about 6 to 10% uplift over the next 6 months or so. So if you want to take advantage of the exchange rate, the second consideration is what you do with your Aussie dollars once you've bought them. We appreciate that many investors prefer physical property, but understandably, they may not wish to invest in such assets in these uncertain times. In that case, BRAM has a range of lower risk liquid investment options for you to invest in on a short-term basis. That means you can lock in a great exchange rate and park your money in cash or near cash investments, earning 2 to 5% while you wait for the uncertainty to clear. Thereafter, you can reposition for the longer term with growth assets such as property. I hope this has been useful. Please do give us a call if we can help any further.